Hey there, Future Titans. Ever get that rush, that feeling in your gut about where the market's headed? Futures trading is your ticket to capitalize on those instincts. Imagine this. You think oil prices will soar because of, let's say, geopolitical tensions. Futures let you dive into the action, riding the wave of price movements without owning a single barrel. That's the magic of futures. Predicting the future and potentially reaping the rewards. Buckle up, because we're about to break down everything you need to know about futures exchanges. Now let's get down to brass tacks. What exactly is a futures exchange? Picture a bustling marketplace, but instead of fruits and vegetables, we're talking contracts. These contracts are agreements to buy or sell an asset like gold or oil at a future date. That's your futures contract. The futures exchange is where these contracts are traded. It's like the New York Stock Exchange, but for futures. Think of it as the ultimate matchmaking platform. These exchanges provide a transparent and regulated environment. One of the most exhilarating aspects of futures trading is the sheer diversity of assets at your disposal. Forget about being confined to stocks and bonds. Futures open up a universe of possibilities. Want to speculate on the price of crude oil? There's a contract for that. Believe the price of corn will skyrocket? You bet there's a contract for that too. From agricultural commodities like wheat, soybeans, and coffee to precious metals like gold and silver, the choices are endless. You can even trade futures on currencies, interest rates, and even market volatility itself. This vast selection allows traders to specialize in markets they understand best, or diversify their portfolios across different asset classes, mitigating risk and maximizing potential returns. Here's where the rubber meets the road. Futures trading involves buying or selling contracts representing future asset prices. Predict gold prices will rise? Buy a futures contract, sell for profit if correct. Leverage means you only pay a fraction up front, amplifies profits and losses. Risk management is crucial. You're betting on future prices, not owning the asset. Section 5. Why trade futures? Unveiling the advantages. So why dive into the fast-paced world of futures trading? Well, besides the sheer thrill of it, futures offer distinct advantages over traditional investing. For starters, futures are an excellent tool for hedging, allowing businesses to manage price risk. Let's say you're a farmer worried about the price of soybeans plummeting before harvest. By selling soybean futures contracts, you lock in a price, protecting yourself from potential losses. On the flip side, speculators use futures to capitalize on price fluctuations. They have no intention of actually owning the asset, aiming to profit solely from correctly predicting market movements. Additionally, futures provide diversification, allowing investors to gain exposure to various asset classes beyond traditional stocks and bonds. Section 6. Key features of futures exchanges. Futures exchanges are built on several key features that ensure fair and efficient trading. Standardization is paramount, ensuring all contracts for a particular asset are identical, except for price and expiration date. This simplifies trading and eliminates confusion. Mark-to-market settlement, another crucial feature, means profits and losses are calculated and settled daily, mitigating counterparty risk. Liquidity is another hallmark of futures exchanges, meaning there are always ample buyers and sellers, allowing traders to enter and exit positions swiftly. And remember, unlike traditional investing, futures trading doesn't involve owning the underlying asset. You're simply trading contracts that represent the right to buy or sell that asset at a future date. Section 7. Global giants, top futures exchanges. Now that you understand the ins and outs of futures exchanges, let's meet some of the major players in the global arena. The Chicago Mercantile Exchange, or CME, is a true behemoth, offering a vast array of futures contracts on everything from agricultural products to interest rates. The Intercontinental Exchange, known as ICE, is another major player, known for its energy futures, including crude oil and natural gas. For those interested in Asian markets, the Tokyo Commodity Exchange, or TOCOM, is a key hub, specializing in precious metals and agricultural products. Each exchange has its own unique offerings and areas of expertise, catering to diverse trading needs and preferences. Section 8. A futures trade in action, a practical example. Let's bring this all together with a real-world example. Imagine you're a coffee aficionado who believes coffee prices will soar due to unfavorable weather in Brazil. You buy coffee futures contracts, you purchase 10 contracts at $1.50 per pound. The total contract value is $562,500. Fast forward a few months, your prediction comes true. Coffee prices skyrocket to $2 per pound. You sell your contracts. Your profit is $187,500. That's a tidy return on your initial margin. Remember, losses are magnified too, so manage risk responsibly. Section 9. Your roadmap to futures trading. Getting started. Ready to dip your toes into the futures market? First things first, knowledge is power. Educate yourself on the intricacies of futures trading, including different contract types, trading strategies, and risk management techniques. There are numerous online resources, courses, and books available to equip you with the necessary knowledge. Next, find a reputable broker that specializes in futures trading. Look for a broker with a user-friendly platform, competitive fees, and robust research tools. Once you've chosen your broker, you'll need to open a trading account and fund it with the minimum margin requirements. Section 10. Navigating the pitfalls. Common mistakes to avoid. The world of futures trading is fraught with potential pitfalls, especially for beginners. One common mistake is over-leveraging, committing too much capital to a single trade, which can lead to devastating losses. Remember, leverage is a double-edged sword. Another pitfall is chasing after the latest hot tip or rumor without conducting proper research. Always base your trading decisions on sound analysis and risk management principles. And lastly, never underestimate the importance of emotional control. Greed and fear can cloud judgment and lead to impulsive decisions. Section 11. Embark on your futures journey. Congratulations, Future Titans. You've now been initiated into the exciting world of futures trading. Remember, knowledge is your most powerful asset in this arena. Continuously educate yourself, stay disciplined, manage your risk effectively, and never stop learning. The futures market offers immense opportunities for those willing to put in the time and effort. So embrace the challenge, hone your skills, and, who knows, maybe you'll be the next big shot calling the shots in the exhilarating world of futures trading. Now go out there and make some informed bets on the future. Just remember, I'm not giving you financial advice. I'm just trying to entertain and educate you so you can make your own informed decisions.